Hello investors. So as we are approaching the March 31st, which is the financial year ending for India, it is important to note that it's time for tax loss harvesting. So what is tax loss harvesting? So what is the difference between long-term and short-term capital gain tax? So long-term capital gain tax is levied on the profits you earned wherein your holding period was more than 12 months. And if it is less than 12 months, it is categorized under short-term capital gain. Now, as per the latest rule, long-term capital gain tax is levied on profits more than 1.25 lakhs, meaning whatever profits you got till 1.25 lakhs will not be taxed. And as far as the short-term capital gain tax is concerned, whatever you earn, whether it is 1 rupee or whether it is 10,000 rupees or whether it is 5 lakh rupees, everything will be directly taxed. So how much percentage? It will be taxed at flat 20% for short-term capital gain tax. Means if you have booked 100 rupees profit, 20 rupees will be cut as short-term capital gain tax as you are holding it below 1 year. And if it is long term, up to 1.25 lakhs is not taxed, and beyond that it is taxed flat at a rate of 12.5%. So 20% for short term and 12.5% for long term. Now why we are discussing this before March 31st? Because we have got a few days before March 31st. Monday or Tuesday you can do this thing which I am going to tell you, which will save a lot of your tax. So say you have sold a mutual fund or a stock. So the short term and long term capital gain tax both applies for mutual funds and stocks. Mutual funds, note that it is for equity mutual funds whose percentage of equity holding is more than 65% in that fund. So that is treated as an equity mutual fund. So there is a concept called tax loss harvesting. So what you do in that? Say you have booked some profit in a particular stock you hold or even in a mutual fund. So if it is a long-term holding, more than 1 year holding, since long you are holding it, say you have made a profit in that mutual fund and stock both inclusive, say 1.35 lakhs. So 1.25 minus 1.35, so 10,000 rupees is the extra profit you have made over the slab, and then 10,000 will be taxed at flat 12.5%. So how to save that? Similarly for short-term capital gain, say you have made a short-term 1 year, within a 1 year you have done say intraday, swing trades, or even you have bought for a long term, but then you found that the fundamentals of the company is faulty and you you exited that share, and then you made a profit of say 10,000 rupees. So that 10,000 rupees will be directly taxed at 20% rate. So you will have to give 2,000 rupees on that 10,000 profit you have made. So both of them can be offset by selling a loss against that. Let me decode it. So say you are holding say stocks of Tata Chemical since long, say 5 years, and it is at 52-week low or more than that now. So you are very bullish on the stock and you are going to hold for a very long time. This is not a stock recommendation, just I am stating for an example. So you are going to hold in that. So whatever loss profit you don't care because it's a long hold. But then you have made enormous loss in that because you have bought 2 years back and the price has gone much beyond that in a lower side. So you are making say 50,000 loss in that. So what you can do, you can sell whatever amount of stocks you want to sell to make that loss. Say we are talking about 10,000 rupees loss for long term holding, right? So to offset that 10,000 rupees, you can sell equivalent Tata Chemical shares so that the loss in that share is 10,000 rupees. So you need not sell the entire stocks of Tata Chemical because maybe your profit you have to offset is just 10,000 rupees. So sell Tata Chemicals so that you incur a loss of 10,000 temporarily and offset that 10,000 against the profits you have made on a long-term stock which you have sold at a profit of 10,000 rupees. So that 10,000 got nullified, and you can show that while filing your ITR2, you have to file it in ITR2 so that the tax can be offsetted there. So you don't have to pay tax. Then you are bullish on Tata Chemical going forward. So immediately buy that stock. You can wait a little bit or maybe you will get it at a lower price because the share may be continuously falling. So wait a bit or maybe immediately buy that so that you get at a lower rate and then hold it for a long time. So it doesn't create any loss for you because the temporary loss you have taken is only for tax loss harvesting and you have saved the tax as well. Similarly, this happens for short-term capital gain. So you have done a swing trade, then you have made some profit in that. As I told, we have made 10,000 rupees profit and it will be taxed. So 10,000 rupees of profit can be offsetted by showing a 10,000 rupees loss. An important thing here to note is that a long-term capital gain tax can be offsetted by either showing a short-term capital gain loss or a long-term capital gain loss. But in case of a short-term capital gain tax, you can offset it only by showing a short-term holdings loss. This is again to promote long-term holdings by investors. So government also is telling that long-term is better, short-term trades are dangerous, which my channel also always tells you. So this can be done in ITR2. So if you want any other support on this, you ping me. I am happy to help you. If you have any clarification, ping me in the comment box. This is how you save short-term and long-term capital gain taxes and be a smart investor. See you in next video. Till then, happy investing.